Good afternoon, everyone. Today is Wednesday, May 16th. My name is Deb Wilkinson. I'm the Vice President of the Health Plan Options Department at URL, and I thank you so much for joining into our Sun Life webinar. We have a great presentation planned for you and a lot of representation from Sun Life itself. We're going to talk about, primarily how to generate new revenue by offering voluntary benefits. So we're going to talk a little bit about that, employee benefits and what Sun Life offers, as well as we're going to touch a little bit on stop loss, and also absence management. Clearly, with the ACA going into law in 2014, we in the health insurance industry have had a lot of struggles and a lot of challenges with rates and products and really trying to keep the employer plans low cost but still offering a lot of value and comprehensive benefits. So I thought it was definitely an opportune time to have Sun Life present their platform to maybe give you some time to start thinking about your renewals, your group renewals, and how these products can complement your group health. I would be remiss if I didn't take a few minutes to talk about what URL is for those of you that are not familiar with us. URL is a full-service brokerage, and we're made up of several different disciplines and silos, if you will. We have, if you go under our website, which is urlinsgroup.com, you'll see our various departments. Annuity Solutions is run by Joe Corio. He's our Senior VP, and obviously his focus is on annuities. He's had tremendous growth in the last several years, even with the interest rates being what they were. But he also has some really unique programs like college planning and things that can really drive tremendous revenue for you. So if you have questions on that, I would urge you to reach out to Joe Corio. Also, Life Markets. Steve Clemens runs the Life Markets division. Those products with seniors. I mean, seniors are a huge market opportunity. Not only to offer them Medicare products, but life products that complement their Medicare, and such as spinal expense, term, disability on an individual basis, business overhead expense for those business owners. So a lot of opportunity there as well. And as I mentioned, Medicare, Christy Wilbert and Karen McDaniel are co-directors of this division, and again, have tremendous opportunity in front of them, and as all of our agent partners do. If you're looking for a line to get into, Medicare is certainly one that is lucrative and also very satisfying, helping seniors. So keep that in mind. And last but not least, certainly is the health plan option and employee benefits programs, which I also oversee. And that includes all of the traditional group health markets, the self-funded markets, and your employee benefits. And as I always say, what's left of the individual market in Pennsylvania. So again, we're really excited to have you on today just to learn more about it, and I applaud you for taking that time. We will be recording this webinar, so there's no need to take copious notes. We will also, as usual with all of our webinars, you'll receive a link with the recorded version as well as the screenshots, so you'll be able to review it as you see fit. And also, we encourage you to ask questions. We're going to hold the questions until the end because we want to make sure we get through the presentation in a timely fashion. This presentation is set to take 1 hour. And again, there are a couple ways you can ask questions. You can raise your hand icon or on the control panel to the right of your screen, or you can type in your questions in the question box, and we'll throw those out at the end of the webinar. Just with a quick show of hands before I pass this over to Ryan, if you can let me know if you hear me and see my screen okay, that would be great. Thank you. All the little icons coming up. I'm going to bring up the PowerPoint now, and excuse me. Oh my goodness, see? What in the world? Let me try this again. Okay. Sorry, guys. See, I told you I struggle with technology, and for whatever reason. Oh, my goodness. And it's just hanging. There we go. So once it comes up, I will hand this now over to Ryan. And there you go, Ryan. Hopefully you can see the screen, and thank you so much for joining in.
Wonderful, thank you, Deb. Deb, I'm still seeing the URL homepage from my viewing perspective. There we go.
Okay, perfect.
Fantastic. Well, Deb, thank you again for the introduction. Very excited to be presenting today to the panelists, or as well as everyone on the call today. Really just wanted to do a very high-level overview, I think, of the Sun Life presenters. There are 3 individuals presenting today. My name is Ryan Blaze. I am a stop-loss specialist at Sun Life Financial. I handle all new business as well as renewals from a stop-loss perspective. And for those of you who are aware or not aware, but stop-loss basically would pertain to any self-funded medical or health plan, where if an employer does decide to self-fund, they would typically self-fund with adding the protection of stop-loss. And stop-loss is basically another a product added on to the self-funded health plan to mitigate large losses through large medical claims. I also have on the call with me from Sun Life, Lisa Margiotti. Lisa is a senior employee benefit representative. Today, she will be going over basically the meat and potatoes of the presentation, but surrounding voluntary benefits. Lisa's a great rep, very, very well known and respected in the industry, and really can provide a wealth of information and benefits to you as the broker partners with URL. And then we also have Amy Syrian, who's the Associate Director of Integrated Disability. Amy will be going over a couple slides discussing our absent management product portfolio and capabilities. But I think more so now than ever in the past, absent management is something that a lot of employers have their ears tuned up to, specifically with FML, STD, LTD, that employees going out on leave or intermittent leave, that a lot of times an employer will be administering these products and services themselves. And now, due to certain rules and regulations set forth by the government, an employer a lot of times could be out of compliance. And by being out of compliance, there are significant penalties by not being compliant. So if you think about kind of offsetting some of that risk to Sun Life, we do have services and capabilities that would help with those services. So Amy will be going over that. But before we really get into my piece, which is the stop loss portion of the demonstration today, I would like to do a very high level overview of Sun Life. And if Deb, if you could flip to the next slide. So Sun Life is a global provider of insurance and financial products across the world. We're headquartered globally in Toronto, Canada, and in the U.S. we're headquartered out of Wellesley Hills, Massachusetts, which is outside Boston. But if you take a look at, or if you think about insurance as a whole, bigger is not always better, but sometimes having the financial strength and the backing behind an insurer, that whether it's us as an insurer, you as the broker consultant, or the employer, that you really want to do business or probably should be doing business with carriers that are A-rated, that have very strong financial ratings and backings. That way, one, you ensure the longevity of that product, but two, you also have the peace of mind and comfort knowing that if there's a claim out there, the carrier has the ability to pay so, and they've been doing so for a long time. And as you see on slide 3, Sun Life has been in the U.S. group benefits for over 100 plus years in an array of products and offerings. But we have a very large portfolio and product base behind us. And as you'll see on slide 4 here, this is a further one slide back, Deb. I'm sorry, I'm looking at the page numbers at the bottom. There we go. Thank you. This is a further breakdown of the business in force from the U.S. benefits perspective. Taking a look at, and we'll get into the next slide of different products that we have to offer, but we are pretty well diversified. That hopefully, if you think about Sun Life, you don't just think about Sun Life as a life insurer, a dental insurer, a stop loss carrier, a vision provider, a voluntary benefits provider, et cetera. But we're essentially kind of a one-stop shop, if mind you. And if you think about, again, bigger's not always better, but having diversified product portfolio is typically better, which allows us to be more competitive. And here, as you'll see, pretty good diversification. We have about over $1 billion block of group life, disability, and absent management, close to $500 million in disability RMS, which is a carve out, kind of a very niche product from like an integrated disability perspective. $500 million block of dental and vision, $1.5 billion block of stop loss, and close to $1 billion of voluntary or worksite products, which again, Lisa will go over today. So again, a pretty diversified book of business when you kind of break down and look at all the numbers across all of our product portfolio. And Deb, if you could go to the next slide, slide 5 here, thank you. Back in 2016, Sun Life made an acquisition of Assurant Employee Benefits. And the two primary reasons behind that acquisition was Assurant had their own proprietary dental network, which is one of the largest, not the largest, dental networks in the country. In addition to that, Assurant also had a very robust and substantial voluntary network product portfolio as well as platform. And those were the two primary reasons why Sun Life made the acquisition of Assurant. And with the addition of Assurant, combining that with the existing Sun Life products, that except for your traditional group medical insurance, there really isn't an employee benefit group product that we don't have in our product portfolio. And as you see here on slide 5, going from life insurance, we have our basic life and AD&D, optional life, spouse, independent, to disability. We have absent management, short-term, long-term. We can also do, if the group decides to self-fund their short-term disability, we can do advanced funding, advice to pay. But we also have statutory disabilities for those states that require it: New Jersey, New York, California, Hawaii, et cetera. As I mentioned, we also now have dental and vision, and Sun Life had dental in the past, but it's a much more robust network and product portfolio now. So we can do PPO plans, dental or DHMOs or dental HMOs, dual or triple options, and then we also have a vision program using or partnering with VSP for their network. Voluntary benefits, basically all of the myriad of coverages here, from critical illness all the way down to vision, that we can offer those on a voluntary or individual level basis. And then stop loss, specific as well as aggregate. So again, I think Sun Life is pretty well diversified from a product portfolio opportunity. So if there is ever an opportunity to think of Sun Life, please consider us for these lines of coverage. Or if you only thought about Sun Life from a life or disability perspective or just stop loss, just know or be mindful that we have a whole host of other products that we can offer up to our clients. Okay. Perfect. So I will get into stop loss, and I have a couple slides that I'd review on, or will review on stop loss, and I'll be pretty quick with these, but to highlight a lot of the major bullet points. But on slide 7 here, really just want to highlight the financial strength and expertise that Sun Life brings to the market from a stop loss perspective. But we've been in the stop loss business for over 30 years, and at this point, we are the #1 independent or direct writer of stop loss in the country. We have a block of business that's about $1.4 billion as the year end 2017. And when you think about stop loss is one of the only, if not the only, product in the entire insurance industry that does not have an annual or lifetime maximum. As Deb mentioned, as a result of the Affordable Care Act, Obamacare, healthcare reform, whatever you want to call it, most medical plans today do not have an annual or lifetime maximum. And as such, most of our stop loss policies include a mirroring provision, which basically defaults to the employer's medical and prescription plan documents. So if the medical plan has an unlimited lifetime maximum, therefore our stop loss policy would typically follow suit. And when you think about stop loss, what it is, and how we reimburse a client for a large claim, we all know that sometimes bigger is not always better. But when you have a stop loss carrier with such a large block of business and the ability to reimburse even the largest of claims, sometimes bigger is better, in the sense that if we had a $1 million claim that we needed to reimburse, we'd be able to do so and continue on with our day as normal. Granted, we don't like to reimburse $1 million plus claims, but we have the ability to do so when needed, and that goes for any size claim. In addition to that, from an expertise perspective, as mentioned, we've been in the business for over 30 plus years, #1 direct writer, but we don't just kind of hang our laurels on being a large stop loss carrier, that we're constantly providing market insights, values, recommendations, literature, basically innovative insights and educational opportunities, but basically trying to provide solutions to our broker and carrier or broker and consulting partners for you to better help manage your customers, whether from a retention standpoint or to help you bring in new business and increase your bottom line. So that's really why I think Sun Life is a great stop loss carrier, but also kind of parlays that with the ability to offer up other lines of coverage. Deb, if you could go to the next slide, please. Great. So looking at the stop loss business model in general, we are relatively agnostic on kind of who we do business with from an administrator standpoint, but looking at the distribution channel, a lot of times we work direct with our brokers and our consulting partners, you yourself, URL, et cetera. We also work directly with third-party administrators like a UMR, a Meritain, a CoreSource, et cetera, for those of you who may be familiar with companies as such. And then we also work with other regional partners. And then from a prospect perspective, right now, across the country, in most states, and there's a caveat to New York and a couple other states where there's a minimum requirement, but if a group is currently self-funded, we can quote on their stop loss down to groups that are enrolled with 35 employees or more. Again, mindful that that's assuming the group is already self-funded. If a group is fully insured today, but looking to transition to self-funding, Sun Life has made the decision to draw that line at 200 enrolled. So if there was a group that was fully insured under 200 enrolled, and if there was an RFP sent to us, we would respectfully decline to quote initially. However, I always tell my broker and consulting partners to at least let's have a conversation, because if there's a group that's either made the decision to self-fund or strongly looking to self-fund, let's have that conversation, and I will get the request made for an exception to get that pushed through. But technically speaking, we are dividing that line at 200 if the employer is currently fully insured. Just looking at some key industries, this is probably not uncommon to many other insurers, whether it's stop loss, life, disability, et cetera. But manufacturing, transportation, commerce, trade, financial, kind of the white collar services, health, hospitals, et cetera, are some of our more prevalent industries where we write business. And then from a distribution channel, I'm one of about 40 different stop loss specialists nationwide where we handle nothing but stop loss on a day-by-day basis. Most people I would talk, stop loss to outside the insurance industry, they'd ask me what I'd do, and then within 2 minutes, I'd probably put them to sleep. But I love this. This is kind of my expertise and my go-to. So Deb, if you could go on to the next slide, please. So as I mentioned before, Sun Life, in addition to being a large stop loss carrier as well as a large life disability carrier, et cetera, that we're constantly trying to provide insights and innovative solutions to our broker and consulting partners. And highlighted on this slide titled Guidance, these are just a few of the things that we can show as value adds or bring to value for our broker consulting partners. And I'll just highlight on a couple of these, but you can reach out to Deb or myself direct if you would like copies of these reports outside of the presentation. But the one in the upper left-hand corner that we've highlighted here is the Sun Life Stop Loss Research Report. We will be coming out with our 2018 version within the next month or two, but basically it's an overview or an outlook on our block of business as a whole, that looking at our block of business from a premium perspective as well as number of client perspective, that we feel as though it's relatively credible. And basically what we're doing is doing a deeper dive, pulling apart all of the information that we see on a day-by-day basis of what was the frequency of cancer claims and what was the amount reimbursed for this year? What's the emerging trends of transplants versus high injectable drug usage, et cetera, et cetera. So it's a great white paper report that we publish each and every year, but find it to be extremely valuable when consulting with an employer who's already self-funded or thinking of self-funded, and basically letting them know that there's a lot of positive as to why you would self-fund. But if you decide to self-fund, which I'm a large advocate of, just make sure that you go into it with your eyes wide open and making sure that you do business with a reputable stop-loss carrier, because hopefully no one has a very, very large claim, but there's a possibility there could be $1 million claim or a $5 million claim. And just, you would really want to make sure that you're doing business with a stop-loss carrier that's going to be there and protect your back when you absolutely need to do so. And I find that this report helps direct that conversation. We also have the stop-loss benchmark report, that with a valid stop-loss RFP, we're able to benchmark that group or your organization versus groups of similar size and industry. So this helps, again, further the conversation with that employer that if they are deciding to self-fund, that, really what stop-loss options should we be going with? Should we be going with a $50,000 specific deductible versus a $100,000 deductible? Should we be going with a specific only coverage versus or spec and ag? So again, this helps further the conversation as to, or helps an employer make a decision on their stop loss, but not just a decision, but an informed decision through the use of data. And then we also have a self-funded playbook. And this is a very great, for lack of better terms, playbook where for those of us that are looking to improve upon our knowledge of stop loss or self-funding, or just have very little knowledge or looking to gain a lot of knowledge, this is a great report that basically highlights the components of a self-funded health plan, what to look for in picking the appropriate administrator, what to look for in selecting the appropriate stop-loss carrier, and basically marrying all of that together to better paint the picture of the self-funded program as a whole. And Deb, if we could go to the next and last slide from the stop-loss perspective, but really, why do we want to use insights? That we can all make decisions on what we know to be true or what we think to be right or wrong, and this has worked in the past or this hasn't worked in the past. But we found that access to data is always a better thing, and I think most people would agree to that. But having the insights is, I've always found that better data equals better answers, and this is ultimately what we're trying to accomplish here. But show that Sun Life is or hopefully a respected stop-loss carrier, that we can provide much more data and insights and innovative solutions in tandem with our proposal. So this is, another one of those things, I think, when you think about a stop-loss carrier, any insurer in general, that, hey, if they have a competitive rate, that's always at least our foot in the door. But having the other value adds to back that up really sets us apart from our competition. So that concludes my portion of the presentation today. I appreciate everyone's time. Again, as Deb mentioned, if we could leave the questions to the end, that would be fantastic. I'm happy to answer any other questions, but would like to turn the presentation over to Amy Sirian, and she will be highlighting the absence management section of the presentation. Amy?
Excellent. Thanks so much. Great discussion there. I even learn something every time. So thanks so much for having me. A little bit about absence management, right? It's not new to anyone. It's really complex. It's been around for a while. With every year, or every month, I should say, there's new laws going into place federally, statutory, municipalities. We understand the difficulties that employers are having with managing absences, right? It could be related to a lack of staff and resources to effectively administer them, to keep on track of them all. Intermittent is particularly cumbersome. We find that most employers, when they're not sure, they just approve for fear of having a decision come back on them. That's not correct. It's difficult to interpret and comply with those complex, ever-changing legal requirements, the statutory ones I talked about, as well as municipal that are developing compliant policies for multi-state employees. And then certainly, they have decreased productivity and engagement due to absenteeism. So, the direct cost of absence, industry studies will tell us, is about 15.4% of their payroll. And really what Sun Life decided back in 2006 when we said, we're going to offer this benefit, but we don't want to just offer it as sort of an accommodation to offering disability services. We want to offer the best program possible, the most robust and comprehensive solution to our clients so that they could feel the relief of the burden from the tracking and managing the leaves and accommodations. They wouldn't have to, spend days trying to interpret what those regulatory and legal requirements were. Certainly, we want to make sure that we are providing a positive and seamless experience for employees who are needing to go out on leave to either care for a family member or perhaps it's for their own medical condition. We want to be able to guide them through the process from the very moment they need to file it till the time that they go back to work, or if unfortunately they continue on to disability. We want to be there to ensure compliance. So consultation, coaching, help them make informed decisions, help employers keep a pulse on what's happening with their workforce without having to do all that day-to-day tracking. And then we offer an integrated processes and communication. So it's a single intake, customized integrated correspondence, integrated leave and disability reporting and tracking, so things run concurrently, and flexibility in how employers can manage their leave. So we can be as strict and compliant to the regulations, or we can, look to match the culture of their workforce. And, do they want to start at the shallow end of the pool and then, review how their leave program is going? We can provide all of that. But most important bottom line is, reduction in incidents, reduction in duration, improve productivity, and reduce the total cost of absence. So when we decided to do that, we made a conscious choice to partner with a corporation called ComPsych Corporation. They are one of the leading providers of leave and EAP services, certainly across North America, but EAP across the globe. We'd already had a relationship with them for EAP that began back in 2004. And really what we offer is a specialty leave model where we have deep expertise in both disability and then leave management. We have a combined experience of over 50 years, and really that provides the best of both worlds. So right now, together, we provide the leave and absence management services with the integrated disability for almost 200 employers. That goes up to about 500,000 employees. And ComPsych alone has leave services to approximately 3,000 employers, over 3 million employees. So we've certainly got a lot of experience, but it's near and dear to our heart in providing this specialized focus and expertise across a wide spectrum of businesses. We are, and you can go ahead and go right to the next slide, Deb, thank you. So as you look across our product breadth of our absence management services, you'll see the disability management, short-term disability, long-term disability, statutory, that also rolls into New York PFL, which I know other states are not far behind them, advice to pay programs. With our leave management, it's federal leave, state leaves, ADA. We have a proactive ADA review embedded right into our solution at no extra cost, as well as we have an ADA solution that will actually assign an attorney, an ADA coach that employers can choose, and they will work with them one-on-one, pulling case law, providing them the most recent court decisions, and walk them right up to the process of having that interactive discussion with employees. We look at USERA, domestic violence. We can do company policies, jury duty, you name it. We can go ahead and track it for them. And then you couple that with the work-life program. So that would be your EAP, which we have that direct connect with ComPsych Corporation, several different classes of programs that we can offer. It ties right in. So if we have someone calling in and they've got a maternity claim, it can transfer them over to AP, and it can help with childcare services. If they have diabetes, if there's someone calling in and they've had a situation with domestic violence, we do those direct connects right away. And then certainly with our disability programs, we have the vocational and occupational resources, reasonable accommodations for return to work. We have our clinical experts. So all of those working together in concert provides an integrated solution that is well honed and supports health at work and health at home. So you can go ahead into the next. Yep. There you go. So our integrated experience, as I said, it's really based on releasing the burden of administration for the employers, as well as being a positive experience for the employee. A couple things that I'd like to call out that I think are differentiators for Sun Life is that when you see here that we have absence specialists, those absence specialists, for the most part, all have backgrounds in HR and or benefits. They all have college degrees. So they are there to not only walk employees through what filing a leave and or an integrated disability is like, but they're there to educate and inform, talk about any state leaves, talk about what the company requirements are, discuss what the difference is between job protection, so FMLA, and income protection, disability, if that happens to be particular to their situation. Because let's face it, even if you've been in the business, even if you sort of know, it's a lot to take in, and even if it's a planned absence, it's a time of what can be considerable stress because you're out of work, you're not on the same schedule, you're not earning potentially the same income that you were, you're taking care of potentially someone else. So, we're there, not as a call center that you would think a traditional call center where it's to get folks on and not get the information, get them on and off the phone as quickly as possible, but really to take the time that we need to let them know what's going to be happening, what information they're going to be getting, what information we need to get back from a medical provider, our proactive outreaches, how we're going to be communicating with their employer, and any next steps. They can do this any number of ways by filing a claim. They can do it by phone, by mobile app, on the web. We have a web portal, and at any time, if anyone wanted a demonstration of that, I'd be happy to provide that, or they can do it by old-fashioned paper. So a variety of ways to do it that's multi-generational. Truthfully, about 70% of employees at least call in their first claim, and then they might use the mobile app for, reporting intermittent time, reporting a return to work date. But there's different avenues for them to utilize. And then we have one single medical certification form. So you're not using, an attending physician statement for disability, and then you need an FMLA form, and then you need, if you have statutory New York DBL, we put it into one single medical certification form that we've worked with the Department of Labor over the 10 plus years that we've been doing this to hone and make it as efficient and effective for the providers to complete and get back to us as quickly as possible. And we will proactively reach out to those physicians if we're able to get their fax number and electronically send it over to those doctors. We do follow up for that medical certification form. We follow up on day 5 and day 10, and we let the employee know when it's come back to us. If we don't get it, then by day 15, letter of the law says, well, you can go ahead, or day 16, you can go ahead and close that claim. But what we tell most of our clients is that, they have the choice to be more flexible, and many do. Many put in a silent 7-day grace period, or perhaps they want to leave it open for 25 days or 30. They have the flexibility to do that. And then a proactive ADA consideration is built right in that I talked about. It's embedded. It's no extra cost. So if an employee is submitting a leave and they are not eligible because they're part-time, or they've not worked enough hours, or perhaps they've already exhausted all of their FMLA, that's okay. We're going to go ahead. We're going to deny them for their FMLA and any other leaves that they may have potentially been eligible for, but then we're going to automatically send out a request for an ADA. So nothing falls through the cracks. And really what the EEOC has said is that the employees don't need to know to ask for an ADA consideration. It is the employer's responsibility to identify that. And that's quite challenging, because it could be managers that don't see it. It could be an HR staff that doesn't see it. So we've got that built right in where we, will automatically get that process going, reach out for that medical information. It comes back. We provide it over to our employer clients so they can have that interactive discussion, engagement with the employee. And then once they make a decision on whether they're going to go ahead and approve or deny, they report that back to us. We send out all of the communications. We update all of the reporting and do all of the tracking for it. So it's a nice catch-all for our employer clients. And then I talked about integrated correspondence. So we do have an integrated acknowledgement letter that will let employees know that they filed for leave, and integrated meaning if there is a disability that goes with it. Again, it's going to call out any FMLA, statutory, municipal, company policies, anything that we're administering for that employer client, as well as that they've filed for short-term disability. Once that information goes out, we share any updates that come in through the leave team or the disability team back and forth. We use disability as it can be used as a proxy to approve an FMLA, but we're never going to hold up an FMLA decision if we have enough information to make it. We're going to make our FMLA decision, approve it, deny it, and if we need more information for the disability, we'll reach out for that separately. So we'll get separate communications, but that provides, again, that heavy compliance and the expertise in both disciplines of having experts handling each one.
Well, thank you. This is Lisa. Amy, thank you very much for that explanation on absence management. What I'd like to add to Amy's presentation is in order for a group to take advantage of the absence management services through Sun Life, they need to offer Sun Life voluntary short-term disability, advice to pay short-term disability, or employer-paid short-term disability. And we do offer first-time buyer pricing, so it's a very affordable. There's two different levels of absence management, and the first-time buyer pricing, including 5% commission, is $1.55 per benefit eligible employee per month. So let's say, for example, you have a 200 life case. In order to offer absence management services through Sun Life, it would only cost $310 a month, which is about $3,700 a year. And so I'm able to provide you with, it's called an absence cost estimator. So when you send us the census to quote the benefits, based on the demographics of the group and the industry, I can provide you with an illustration that shows if we're able to reduce their paid time off by 1%, 2%, 5%, or 10%, this is how much money the group will save. Because as Amy mentioned, my favorite statistic is employers estimate that absences cost them 15.4% of their covered payroll. So again, this ensures compliance, and it takes the liability, kind of like away from the employer or that person that administers benefits in the event that they were to not track a leave correctly or deny a leave of absence. But it's all about saving the employer money. So now what I'd like to do is talk about, just real quick, I'm sure all of you guys are familiar with ancillary benefits, dental, life, disability. But just so you're aware, Sun Life offers more than just voluntary and worksite products. We do offer employer-paid products as well. I do spend so much time talking to brokers about voluntary, and I primarily write voluntary benefits, that sometimes they forget that we do offer employer-paid benefits as well. But we really are a one-stop shop for all ancillary lines of coverage. And just to tell you a little bit about myself, I'm born and raised in Central PA. I spent 10 years working for a large insurance company as an enroller, and then I spent over 15 years with Assurant. And as Ryan mentioned, Sun Life purchased Assurant employee benefits about 2 years ago. And one of the things that I like about working for Sun Life is our enrollment capabilities and the full suite of products that we offer. So I just want to touch on the strength of our dental contract. We have a ton of flexibility, all new business written on Sun Life paper. All of your employers have access to what's branded as the Sun Life Dental Network. In all counties in PA, except for like one up in the Scranton area, Sun Life does have the largest dental network out of any carrier. So, let's face it, our job is pretty hard. URL and brokers, you have a variety of different ancillary carriers that you can quote with. And, all the ancillary carriers pretty much sell voluntary, employer paid, and they've even gotten into worksite products. So it's all about positioning why Sun Life versus some of the other carriers. And so why I have worked for this company for so long is, again, the strength of the dental network. We have affordable rates, which is always important. But the Sun Life Dental Network consists of Assurant Dentists, United Concordia Dentists, Aetna Dentists, and effective February 1st of 2018, it also includes the DentiMax network. So I have the ability to run dental network comparisons through a third party called Netminder. So if I know I'm competing against MetLife or Guardian or Humana or Emeritus for dental coverage, I can run a report so your client sees by county how many more providers Sun Life has in the dental network versus whoever the enforced carrier is. Short and long-term disability coverage, from a prospecting perspective, statistically on a national level, only 20% of employers offer their employees disability insurance. So only 20% of employers offer their employees long-term disability coverage. Well, when you think about all the different types of insurances we can buy to protect ourselves, long-term disability, hands down, should be the most important benefit that any of us buy. We all work because we need health insurance. We need to be able to provide for our families. We need a paycheck. So in the event that we lose our ability to go to work, if I've noticed in Central PA, obviously everyone wants to offer an attractive benefit, suite of products that they offer their employees, but because of the rising cost of health insurance, they no longer have the ability to pay for employer-paid life, short-term, long-term, dental, and vision. So the trend that I've noticed in Central PA is brokers talk, if you just get in the habit of talking to your clients about offering these products on an employee-paid basis, again, they're affordable, they're popular, and, in my experience, you'll get, half or 50, 60% of the employees that see the value in getting these benefits. So what I like about our suite of voluntary short and long-term disability products versus every other carrier in the marketplace, we do a full open enrollment when we roll out the benefits, and we do a full open enrollment annually. This is key because most carriers say, if you didn't buy long-term disability coverage when you were newly eligible for coverage and now you want to come on the plan, you have to answer health questions. So what if someone was newly diagnosed with something and now that's why they want to purchase insurance? With most other carriers, they wouldn't have the ability to get it because they would never make it through medical underwriting. At Sun Life, we do a full open enrollment on short and long-term disability coverage every year. I also like to offer unit plans. So employees don't have to insure 60% of their salary. So let's say you have someone that makes $40,000 a year, they can't afford to buy $2,000 a month, well, they could get $1,000 a month. So again, a lot of flexibility to purchase the amount of coverage that you need, but also the amount of coverage that you can afford. And then, of course, we offer the AFLAC type products such as like accident, cancer, critical illness, those type benefits. We can do, obviously, we can offer multiple different accident plans. We have 2 different issue age cancer plans. And then critical illness coverage, we can either offer at issue age versus attained age. And the same thing with disability coverage. So there's a variety of different carriers that you can use to offer voluntary benefits to your clients, right? So you first, AFLAC probably has the name recognition because they do spend a lot of money on advertising. And there are AFLAC reps that call on clients all day long, your clients, talking to them about offering AFLAC. Well, what most employee benefit brokers know is that there are a lot more affordable solutions that a client can offer their employees. So if you are, or if you need help because you have a client that has offered voluntary products through maybe like an AFLAC or a Colonial or an Allstate, and you want to show them something more affordable, but you're not sure how to go about it. I am very hands-on. You can get me any data that you can get from your client as far as the census, AFLAC brochures, bills, and I'm happy to put together a rate comparison for you and go out and help you write the business. Gap coverage, That's basically deductible insurance. You can do it on a voluntary basis or an employer-paid basis. This worksite product, we do have some groups that roll out a high deductible plan for the first time. And with some of the savings by moving to a high deductible plan, they do take the savings and purchase a gap product. So any medical expense that would go towards the deductible would be an eligible expense under the gap plan. And then we offer vision insurance through VSP. There's 2 different VSP plans that we offer, the signature plan or the choice plan. And again, voluntary or employer paid. But VSP has the largest national network of eye doctors, so you don't have to worry about access. So now if we move on to the next slide, it's all about the enrollment experience. And again, not only do I love our suite of products, but what I love about Sun Life is that they allow me to provide the proper enrollment support to handle the benefit communication. And like I said, there's a lot of other carriers that offer the entire suite of products, but then they expect the broker to do the benefit communication, or they expect you to partner with an enrollment firm. And the enrollment firm would handle the benefit communication. Well, the enrollment firm's not going to handle the benefit communication for free. You're going to have to take a haircut on your commission and earn less money to have someone else handle the enrollment. That's not the case with Sun Life. We will provide full enrollment support. So in my experience, I like to do high-level overview, group meetings, and then send counselors into the field to do one-on-one meetings. So we have a staffing formula to determine the number of enroller days that we agree to spend on a case. So for example, if you have a benefit counselor that can see 25 employees in a day and you have 100 benefit eligible employees, that means that Sun Life is willing to spend or pay to send a benefit counselor into the field for 4 days. Now you might need one more day, you might, do a group meeting or whatever, but that is so much more than what other carriers are willing to do. So again, if you write a case with us, we're willing to provide full enrollment support. And it starts with the pre-enrollment communication. We do email blasts, posters, paycheck stuffers. We do have a team of benefit counselors locally that we try to use to handle all our enrollments. I personally try to work with a team of no more than 5 people, and I've been working with them for at least 8 years. And there's different approaches. You can do group meetings followed by one-on-ones, or you could just do group meetings and then we could make ourselves available to answer questions, or we could just do customized enrollment materials and you could handle the enrollment yourself. It's completely up to you. But our counselors, they don't receive commission, so you'll never get that complaint that they sold us products that, or we didn't understand what we were buying. We felt like we were oversold. You'll be able to tell by the enrollment results that we get that we're getting the highest level of participation in dental and vision and life and disability. And the lower level of participation we're going to get from accident, critical illness, and cancer. Why? Because we let employees know that 90% of disabilities happen because of an illness and not an accident. So we wouldn't be doing our job if we didn't, educate them about, in order of priority, what benefits should I purchase to provide for my family. So I want to make sure I allow enough time for questions and answers. But we have a variety of different enrollment methods that we use. We can do iPad enrollment. Sun Life has their proprietary enrollment tool. So we can do a web-based enrollment, we can do an iPad enrollment, or we could do a paper enrollment with personalized enrollment kits. Next. And we find that employees are more satisfied with their benefits when they have a better understanding of how to use them. And Sun Life agrees to provide free core enrollment support if you offer our suite of worksite products. And I do have several brokers that have used us to communicate changes to health insurance, cleanse data. They'll say, all right, we're going to go in and offer the suite of Sun Life products. In return, we're actually educating employees about HSA contributions, the difference between the vision plans they have, medical, that's called a core enrollment. So again, we're willing to do the job of the enrollment firm, but you're not taking the haircut on the commission. And in my experience, people are more satisfied with the benefits that they have when they understand how to use them and someone has taken the time to clearly explain them. So they definitely appreciate the opportunity for that one-on-one. So Deb, I think we should open it up to questions.
Sure can. If anyone has questions, if you want to raise your hand icon or type in the question, that would be great. So far, we don't have any questions. You guys did a pretty thorough job. You know, while you're formulating your questions, if you have them, I've gotten many questions about FMLA and ADA, and I think Amy's presentation certainly, if nothing else, should at least get you to make, you know, pay special attention to that absence management. With this litigious sort of industry that we work in, you know, employees are well educated on what their benefits should be or what they think they should be. And when they're out on disability or out because they're sick, you know, it's very important that the employer handles those situations correctly, not only for profitability, but for compliance as well. And again, while you're formulating more questions, I can certainly attest to Lisa's work ethic. She's a hard worker. She understands the health programs as well as the products that she's presenting and how they complement the health products, and also what's best for each person individually. So please take advantage of her strong work ethic in putting her to work for you and helping solidify those group relationships that you currently have with your current clients or those that you are trying to create. So we do have a couple questions. There's a question, will Sun Life go into a group alongside an Allstate, Colonial, etc.?
We typically, the products that we like to offer, we like that to complement what they currently have. And so if we analyze what they currently have with Colonial and we can demonstrate that they will save money on our short-term disability plan and long-term disability plan versus what they have in place, our recommendation is to replace with, you know, the benefits that they offer through, let's say, an Aflac or a Colonial. But there might be some products that they want to maintain with a carrier like Colonial. For example, Colonial offers a hospital indemnity plan. So we don't have to be the only voluntary carrier in there. I just don't think it's in the best interest of the employees if they leave it up to the employee to decide, well, should I enroll with Aflac, Colonial, or Sun Life? So that's why it's our job to demonstrate to the employer, this is why we made a decision to move to Sun Life for voluntary short-term and long-term, because you can get both products for half of what you're paying for a short-term disability plan with, you know, XYZ carrier. So I think if we do our job on the front end, hands down, we'll see the value in moving and replacing those products. Because remember, long-term disability coverage is the most important benefit we can get, and your Aflacs and Colonials don't offer those products.
Right. Okay, well, last call for questions. We're trying to be mindful of your time. We do have a few more minutes if you do have those last-minute questions. And it doesn't appear that there are any. As always, I certainly appreciate all of you joining in, taking time out of your busy schedules, and you know, really being responsible for learning new ways to grab those groups and create that stickiness, as we like to call it. Ryan and Amy and Lisa, I so appreciate your time in all of your areas of the United States that you're in, all three of you respectfully. And hopefully this has generated a lot of interest, and you as our agent partners also understand the value in it. So again, thank you to all, and you'll get the recording shortly, probably tomorrow. And again, thank you all, and I wish you all a great balance of the week. Bye-bye.
Great.
Thank you.
Bye-bye. Bye-bye.
Guys.